Good afternoon. My name is Rod. Uh, I hope everybody is doing good. This afternoon, I'm going to talk about what's going on with Melvin Capital Corporation. That's one hedge fund, and I'm gonna talk about the potential effect on AMC and GameStop. I'm gonna read a few articles and discuss about the potential effect of uh, Marvel Capital issue with the, the potential short squeeze. So let's start. Okay, let's read this first article. Marvel Capital goes on all its public short position in the first quarter. Game blocking firms sold put in 16 stock, including GSX and Viacom, which end up victim of the Ago liquidation in late March. Melvin Kaplan is out of shorting game, or at least short that to be disclosed publicly. The new hedge fund headed by Gaming Plotkin was a target of Reddit crowd earlier this year because it was short GameStop and sold out all its list put option put option position during the first quarter, according to Melvin recent 13F filing with the Security and Exchange Commission. Melvin had already acknowledged covering its GameStop short following a short squeeze tied to Reddit forum called Wall Street Bet. Also, members include retail investors and the video game retailer. But Melvin's latest filing showed that in addition to selling all of its GameStop put during the first quarter, it's also put on 17 other stock. Closing on those put during the quarter may have been unfortunate timing, as two of those put options were on stock that collapsed during the late March liquidation of positions held by Bill Wang, Archego Capital Management. Two of the most notable alcohol liquidations were GCSX, T2, and Viacom CBC, which fell 60% and 30% March, respectively. Both are sold during the January rating frenzy, and during the quarter, Melvin sold all it but put in both names. Melvin sold put on 750,000 shares of GSX and those 2.26 million Viacom CB share. Melvin reported lost 7% in March and has down 49% during the first quarter. It fell 54.4% in January, according to a letter to investors, CBEC institutional investor. After Melvin was plummeted during the GameStop event, Coin 0.72 Asset Management, which was already an investor, and Melvin and Ken Griffin said that pumped 2.75 billion into the hedge fund. As a result, total firm assets were approximately 8.26 billion as of February 1st, according to the investor letter. Yet, at the end of March, Melvin held 17.5 billion in publicly traded equity, in an indication that Melvin was still using significant leverage in its stock portfolio. During the quarter, Melvin also closed out put position in Weight Watcher International, Tabula Rasa Healthcare, ADT, Simon Property Group, Kroger, First Majestic Silver, MC Network, Trinity Industry, Oli Bargain, Outlet Holding, Beatrice, Legend, Pharmaceutical, Invesco Solar, ETF, and Creoport. It was a public disclosure of those short positions that was made it possible for the GameStop investor to target Plotkin firm. In February testimony before the House Committee on Financial Services, Plotkin said that when the frenzy on trading in GameStop began, its firm had also reduced many other Melvin positions at significant loss. Both long and short, they were the subject of similar posts. But even though Melvin Alvarez sold a quit buying listed put option, which must disclose the hedge fund could still be short in stock in traditional fashion. That is, Melvin could borrow the stock and sell it, hoping to pay back the lender at lower price. Short said do not have to disclose short position. The firm has the management at its 1 billion by May 1st, according to spokesman who declined further comment. Well, basically, what's going on the stock market? A lot of hedge funds are losing money because what's going on the stock market. The stock market is inflated. It's a bubble. We know it's a bubble. A lot of stock market CEO or hedge fund left the market the last few weeks, and also we know for in the case of GameStop AMC, the fact the radiator holding the position and buying more, they are bleeding the hedge fund. And we know soon the regulator will have no choice to raise the margin, and the hedge will have no choice to pay. But we know is there some dark pool activity that uh, hold hold back the MC short squeeze. Um, but every day we're holding, we're doing the hedge fund. So more and more hedge fund are going out of business. So that's good news. We also know what's going on with the China real estate debt crisis. That's another factor to add to the mix. Uh, I want to share another article. The hedge fund that lost more than 50% settlement betting against GameStop closeout of its public short position on the first quarter. Melvin Capital called out the public short position in the first quarter following a battle earlier this year with GameStop, until drove up their share price and caused major loss for the short seller. According to the filing submitted to the Security Exchange Commission, the New York-based hedge fund exceeded all of its put option, meaning it bet against the seven stock in the first 3 months of the year. The short position included Reddit-driven GameStop AMC Entertainment, along with other less known names like logistic company Clearport, airport company Viatrax, and Invention Solar ETF. The firm still could have more technical short positions that don't have to be publicly disclosed, but Melvin declined to comment to Insider on why it's closed out on the put option position and if he had any other private short position. At the beginning of the year, Melvin Capital and other hedge funds found themselves a losing battle with the army of Reddit traders who caused GameStop to share the skyrocket, squeezing the firm which had begged against the game raider. When a stock price go up, they often cause the short sale to cover their position by buying back at a higher price. Melvin Capital took 52% loss because of the craze, and its founder Gabe Plotkin took 460 million person loss. Bloomberg report at the time by the end of the journey, analysts estimate GameStop short sale had lost 19 billion in total. Melvin Capital closed out this GameStop short position on January 27 and ended the month with 8 billion in assets under management, compared to the 12.5 billion it started the year with. The firm took another loss in March, but closed the month with 7% loss, finishing the quarter down to 49%, source to insider previously. Meme stock short seller continued to be squeezed day by traders recently. GameStop AMC short lost nearly 1 billion in just a 5 day of trading, according to Optex data and share price of the two stock red. So that's another article that mentioned the problem with margin capital, and we can expect more and more hedge fund to go out of business or to uh, buying the stock or just go out of business. And we're still waiting for Citadel for Ken Griffin to buy back the stock. But that's a good news. That's mean what we're doing is a good thing. We need to own, and also I expect a short squeeze between this summer and the beginning of this fall. So AMC Ape Army keep holding position. That's what's going on. That's a good thing. And share the news with other member of the community. If you can buy more, share, but hold your position. It's a matter of week or months. And also, when we look what's going on in the world and the geopolitics, and also um, what's going on the economy, the global economy. Um, the hedge fund also have to pay some fee for the logistic, the inflation, all those things. So hold your position. I think it's worth it. Um, Now I'm gonna show you the price AMC today. So we February, no, sorry, we April 22. So actually, let's look the price. AMC after AMC Entertainment Holding Incorporation. The price is 16 dollar and 31 cent. I don't think they play with the price. They do their best to hold on the price, but what I see regarding the price, that's not the real price. That's the price display, but the real price is displayed on the dark pool. And we know there's some dark pool activity, illegal activity in the dark pool. So what we're doing, MC Army, that's good. We have to hold position and buy more if it's possible. Let me show you another article quickly. This website mc.crazy awesome company.com. This website shows the price of MC, but also the volume of sell or buy back by the MC, the hedge fund that own that borrow MC shares, such as Citadel. So you can see the volume. You can look different stock. You can look at different tab. See the strike, the call, the total call. This is the trading volume. See available share to borrow. For the MC short squeeze, it's a good idea to find that type of website to follow the amount of share to borrow or the amount share to for the hedge fund to reimburse. Let's say you have to reimburse 70%. My suggestion is to reposition. If or you can, if let's say you have 100 share, you can okay, 105 share, and you put money, you can sell maybe five to get quick money to pay some bill or to cover your initial spending, your initial investment. But but when the coverage or the amount of share to buy back is 50, 60%, now you may consider the option to maybe sell 20%, 30% of your share. And when you go to 70%, maybe sell 60, 70% of your share. And that's my suggestion. This way, you make sure you have money at different level. So you get money. You may sell a few share when it's 20, 30% to cover your expand your initial investment. And later, uh, when it's 50, 60%, you sell maybe, I don't know, 30, 30%, 40% of your share. And when you reach 78%, now you may consider to sell the balance of your share. But it's up to you. That's my strategy. But because you don't want to sell all your share too soon, because let's say you sell your share let's say you sell your share example $1,000, right? And you go and the squeeze continue until I don't know 20,000. Probably you'll be angry or pissed off. But let's say you sell 5% of your share at 1,000, then you sell another 15% at 5,000, then you sell another 20% at 10,000, then you sell another 20% at 16,000, then you sell the balance at 25,000. At least you make sure you play safe and you maximize your profit. What I mean by that, you don't sell all your share at 25,000 because you don't know if you go at 25,000 and you don't know if the government will um, invoke an executive order to stop the squeeze. But if you sell at 5% of the coverage, you get money to cover your initial investment and to have some money to spend because we know we have a lot of inflation right now. So people need to pay their bill, right? But you don't sell everything at 5%. So what I mean by that, you don't go at the one end of the spectrum. You sell all your share when the coverage is low, and you sell everything when the coverage is high. So you're in the middle. So you go, you it's like a graph. I don't remember the name of the graph, but it's like a chair. So we have different level. So at different level, you sell some share, and this way you cover your base, and you can make a lot of money too. So you play safe and you try to maximize. So I believe that's a good strategy. So basically, that was the news for today. So hopefully, more people stay and continue to buy share and hold their position for weeks and months. So, like I say, I expect the AMC short squeeze to be triggered probably in the summertime or maybe the areas of fall season, probably around September or October. But I'm pretty sure it will happen this year. Even though if it happen next year, no problem. I will just buy more. So have a nice day. Thanks for watching my stream. If you have any comment, any question, feel free to leave a message. I will respond as soon as possible. So have a great day and hold your position. Have a great day. Bye bye.